2025 saw considerable volatility amid ongoing geopolitical conflicts and rising protectionism. However, there were also some bright spots, with AI driving growth across the globe and a broadening of high-performing sectors beyond the Magnificent Seven. As we head into the new year, there are a number of themes that we'll be watching. Starting with fixed income. Short-term bond yields have been declining in both Canada and the US. However, longer-dated bonds have been increasing in both countries as investors demand higher compensation to hold them. We expect inflation to remain above the 2% target that's been set by most central banks in the developed economy, continuing to weigh on households into the new year. Taking a look at equities and starting here in Canada, we will be following discussions around the Canada-US-Mexico agreement, which is slated for review in July. A favorable outcome is vital to Canada's economic health, as 2.3 million Canadian jobs are tied to exports. The federal government has also been accelerating trade talks and nation-building projects in an attempt to enhance Canada's economic resilience. We will continue to monitor the progress that has been made on these initiatives in the new year. In the US, the full impact of the tariffs has been relatively muted. However, we will continue to watch for changes in the CPI, where we're starting to see some upward pressure from the tariffs. We remain optimistic about the US's rapid adoption of nuclear energy, having signed a historic partnership with 3 private firms to deploy a new fleet of nuclear reactors nationwide. AI also remains a focus heading into the new year, as we expect another substantial increase in capital spending by the hyperscalers in 2026. Hyperscalers are those companies that provide large-scale computing services through massive data centers. Finally, we continue to see opportunities in what we call global champions. These are blue-chip companies with a defendable competitive advantage, excellent management teams, healthy cash flows, and strong balance sheets. Now, although the Chinese economy continues to be impacted by declining residential property prices, we are seeing pockets of strength, namely in luxury goods sales and technological innovation. Europe still suffers from muted growth and ongoing geopolitical tensions. These are reflected in valuations, and we expect this will carry into the new year as well. These are some of the key themes we believe will shape markets in the new year. For more, please read our 2026 Market Outlook. Thank you for watching, and thank you for your continued support.